Welcome to TradeTheMBI.com. This is John. This report is for the 9th of February, and well, let's just go straight to what the readings are. As you can see, we've filled back in. Well, here's what we've got. If we look at the extreme histogram down here right next to our ATR, which has now achieved 60, that's fantastic. The average true range, 60 points. That is a huge increase from the tiny bars that were taking place on a given day over here, and that's actually the average of it. So pretty amazing. That just shows the extremity of what the move was, because that's taking an exponential of the last 14 days range, and these became so large that it's impacted. Now what we had here though on this giant wick bar is, and this is where you get all these headlines and things like that that are so dramatic, but for those that traded in futures, we'd already revisited these levels. I mean, yes, we had hit that low right here and came back, and then the next day the open was right here, but before that open we had this massive decline in futures. So these losses in that were already experienced, and then when we popped from it, the difficulty is that we were below the red line here on our extreme, and we know that when we're in a weak signal, you're likely to revisit those lows. So when we talked about the little pop that was developing here, we suggested that unless you saw a sharp turnaround in both short-term, mid-term buyers at the same time, we're not going to hold on to any pop, and that's exactly what's taken place. You can see the trailing short daily ABM right above has started to plateau right here, which we would kind of expect because we expect some consolidation around this bottom point. It started to look that way. We're beginning already another dip below on the shakeout here below the yellow. Fine, we're in pre-market, but the start of this turning up, the yellow coming above the blue, is the first beginnings of a potential opportunity as a long play. I think it's still too early because we don't have any crossovers here. You don't have any reset of the orange coming below, and when you have the steel and the orange caught between cyan and red, we know that's a continuation. And this is what I was talking about. Continuation move, meaning we're already headed lower, so you're likely to continue heading lower. The extreme histogram is healthy at this particular point. You're inside negative 50. We would expect to see that move up. What really is interesting about what's happening is the light liquidity. For those trading futures, you know what I mean. Normally we would be seeing hundreds of contracts on bid and ask all the way. Now we're in the teens at times, or even single digits, and that's what's creating these vast swings. And it's as though large institutions in that just decided to stop buying all of a sudden and wait, or they're just allowing those fluctuations. But it takes an awful long time to build positions and or exit them when you have that kind of thinness, and that creates dramatic swings. So here we have the NASDAQ has refilled almost all the way back to those lows in the pre-market, going back here from, well, when was it, December? Yeah, somewhere in that range. So what do you think about it? In a month span, we had this ridiculous beginning January with all the, hype and everything, and then all we've done is just come back to where we were at the end of last year, and people act as though the sky is falling at the end of the world is come, and that's fine. They can do what they want. Here you can see NASDAQ short-term buyers, like we talked about, had popped in, created a little bit of a buy spread, but they get no support from mid-term or long-term buyers, and shorts more than happy to stay with it because they stayed well above zero until those moved back under. Unlikely to see anything sustainable, in which case we're likely to get pops back up that pretty much just feed back into themselves. And the euro, it may have some agreement because it's starting to ease back. It should get back down to that 120 range and be within it. I know the Europeans were throwing their arms up in fits that they had gone outside those ranges, but this is what happens when you have politics interfering with markets. It's not a natural occurrence, and so you get a variation. You can see for the first time we have DOC spread here for the euro with the cyan above red, orange already above. We already knew this was heading down from the lower shakeout from before. plenty of positive extremes going all the way back to as far down as here into the 122, well, 120, 2000s. That gets long when they have the multiple, 10,000, 100,000s. That's okay. And again, 118 here for TLT is a long time overdue. Still, again, we had 113 as an overall target from some time ago. And look at this one, oil. You would think that the entire world economy has stopped. So we filled in positive extremes all the way to the beginning here, which is this one. Last one we have would be the start of the run, which we talked about before, all the way down here. And given that DOC looks like it is heading straight for there, you've got the potential for some short-term buyers to cause a little bit of a stall in the decline. So we'll see if that's able to abate the situation, but that's going to ease on the inflation front, no question about that, because that was sort of built in the early part of things as it was going. And you may actually see, I would think that you would get a little rebound in treasuries from that, because the problem they have is the amount of money they want to borrow under the new spending bill. Of course, we just ended up with our little mini government shutdown again, because some Republicans thought the amount of spending they wanted to do was way over the top. Be that as it may, gold is, looks like it's stabilizing here again. In this case, you get the ABM from the ETF here, at least at 125.74. Anything above that, it would go long. It's just that simple. Yes, it's still in a short configuration. You've got the short-term buyers causing a little bit of support right here, but that shakedown is still headed straight lower. The encouraging part is you haven't reached this point where you're extremely oversold from there's still people buying into this dip. So it's an interesting indication that this is just about rebalancing, filling in. But again, you get plenty of positive extremes that still haven't been touched, all the way down to the 122 range. So the fact that you're in a sell, those are the opportunities to just trail it and follow through. Bitcoin, it was interesting because we've had a couple of key little shorts that have come with some decent buys. We ended up with a complete reset here of the steel right at this particular buy setup, and it was interesting because we came along here, flattened out near the 50%, which is kind of what you would expect, dip below the red line, and I marked this because this is the continuation call where you have the orange and the steel caught between cyan and red, particularly with cyan on top there, is a continuation move. And sure enough, even though you get a little bit of a pop, the continuation was the slide all the way down here. Well, and I really wasn't even looking for that much of a slide. I think that even going to the 23% would have been fine with that, but it extended it. It got right up to that 76, and you would think that those are literally the ones that have to make it back to the highs. You had really decent readings here, and this is the only difficulty with time, because when you get into some of these bars, I mean, look at that, that's 20 versus 50, and then you go back during the day, and some of these are 8, 9, but others get into the 50s, 60s, and things like that. But unfortunately, there's not enough ticks to actually, I'd have to do like a 500 tick, and even then that would still, not enough data, given how recent this setup is. So it's kind of funny when you think of it that way. This is the ES, crazy time. Look at what we have to do to shrink it to get 1 day. And each one of these bars is 5,000 ticks. That's some serious activity. But we can see from the broader short that it's just a mess when it gets that small. It's crazy. We had just a lot of nice little runs that, came through, clear signals, and then you could just follow it until you ended up with your, steel crossing below. You could take your gains at that point, particularly if it was close to a 50% marker, and then just repeat the cycle. And even to the short side signals, DOC spreads coming through, and boom. This was a big one because you had shorts coming from such a low range that once you did break it, you not only got to it, but you're at the zero and crossed over that zero line at the same time. The red just started breaking down, red and green, between all of them, and then so that exacerbated it. You had a little bit of pause on the dip between the orange, and it wasn't able to do a whole lot of anything. Barely made it back to its 50%, which is kind of where you would be expecting. In fact, it was barely beyond the 38, and then we just began the cascade lower. So we stabilized. Still no full reset for steel. You get these momentary blips where it goes under, and then you look for that cross, and that literally is no range right there. And that was towards the end of the day. And then here we are in the post market, but we're up 15, and it looks like you haven't even moved anything. And that's just because of the dramatic range. Just keep expanding the chart to get it out to see how big that is. But you can see how choppy that is from a direction, and it's very easy to identify too, because look at, you're stuck between the +7 and -7, and you pretty much just sit there. This is just pure consolidation acquisition. So to me, this is what I would refer to as you're seeing large funds buying this, trying to acquire a position at an average weighted price, which looks like it's going to be somewhere right along this, where this 38 is. Well, then look at that, how it's going to be so close to just under 26, so 25.97 looks to be about where they're trying to make their attack as far as building a position. So that could be future bounce off point, and they're on the upside of it now, which means they're likely to bring it back a little bit into it. That way they can continue to add, because while these are just 5,000 ticks, and that's pretty active for pre-markets. This is European and Hong Kong session so far, and not even so much European because it's very early in Europe. So it's quite interesting to have that much volume. Normally we would only see 5, 6, 7, 8 bars, on a normal, last year. So this is good stuff. No reason to be afraid of the readings. Keep at it. As always, though, trade well. I'll keep putting charts up. We put up some really good ones the other day, and we'll keep doing it.